Let's talk about 5 lessons that I have learned from 2022 in this crazy bear market that we're in. We're starting off in the second half of 2022. These are the lessons that I feel like that have helped me continue to be able to profit in a market that's finding every way possible to make people lose their capital and the money in their portfolio. So before I get started, make sure to like and subscribe to this channel so that you can be notified each and every time that I do a video, a live stream, or anything else. You can also click join button down below, and you're going to get all my stock market research each and every day. So make sure to do that. Now, the first lesson is patience. Now, a lot of people struggle with this in the stock market. This has been something that I've had to really hone in over the years, is the aspect of patience in the trading. If anybody that listens to my podcast, they know I talk about this a lot over the past 6 months. Patience is critical to maintaining profitability in your trading. Patience meaning less is more in the stock market. Patience meaning that this isn't a bull market where the stocks just keep going up for what seems like forever and ever. It doesn't forgive sins. It doesn't forgive bad price entries. It penalizes you like no other market can do. And if you get in at the wrong time, if you start chasing, if you start FOMOing into a position because you fear missing out at the big moves, if you start getting into these crazy Wall Street bet stocks like GameStop or AMC or the latest hyped up penny stock, it'll cost you enormous amounts of capital. So for a lot of people that started trading in 2020 for the first time, they're experiencing their first bear market and they've never seen anything like it. And they're getting destroyed. All the profits that they made, maybe it was 100 or 200 or 300% in profits. It's all getting flushed down the toilet. So patience, waiting for the right trade setups is critical to your trading. Let the market tell you what it wants you to do. Don't try to force your will on the market, because if you do that, it's going to destroy your portfolio. Patience also means less trading. This year, compared against all other years, I've probably traded less than I ever have. It's not because I'm scared to trade or I'm afraid to trade. It's because that I've learned from many, many years of trading and from many faults of my own that the more I trade in an uncertain market, the more problematic my portfolio is going to be. The more losing trades that I'm going to have, the more unnecessary losing trades. Yes, I've had losing trades this year, but the key is limiting them, because there's so many ways to lose money in this market that if you're just doing it haphazardly, it's going to eat into those profits like nothing else. The second one is being disciplined, and it goes hand in hand with being patient. Remember, over the course of this past year, I've only made about 90 total trades. That's about half of what I've done in years past up until this point in time. But it's because I've been patient. I've not tried to force trades, and yet I'm still in the green on the year. Now, discipline means that you stick to your trading plan. That means that you're willing to follow your stop losses. That means when you have a stop loss at $100 and you're seeing your stock gap down to $98 or $97, you're not saying, hey, I just hope it comes back. And then a couple of days later, it's trading at 85. No, that means taking the medicine and going ahead and getting out, because you want to know something? If you keep the trade losses small, you live to trade another day. You can live to trade for that next gain that can wipe out a small loss. It's much harder for the next trade to wipe out a big loss, but it's very easy for the next trade that's profitable to be able to wipe out a small loss or many small losses. I've had times this year where I've made 4 trades in a row that have turned out to be losers, but because I kept them all very small. One trade wiped out all those losses and actually put me in the green for the month. So sticking to your strategy, realizing that risk management is more important than ever before. Maybe in the past, you have looked at stop losses as being, maybe I'll follow them, maybe I won't. But this is the year that you have to stay disciplined. This is the year more than any other year. You have to follow your trading plan. If the trade doesn't work out, that's okay. Many people are having bad trades right now. But the one thing that we don't want to do as traders is to make it a memorable trade. Limit the memorable trades. Limit the trades that you're going to say to yourself 10 years from now, oh my gosh, I can't believe I made that trade back in 2022. You want it to be where you're asking yourself, did I trade that stock before? Have I done that before? Did I lose on that trade? Make it an unmemorable trade. The only trades you want to be able to remember are your profitable ones. The losing trades should be so insignificant because you managed the risk so well that you forget all about it. My third point is going to be the willingness to miss out on moves. There's been a number of moves this year that I haven't been able to profit off of. And there's been some moves that I've said to myself in hindsight, man, it was so obvious I should have bought. The first one being the lows that were established on March 14th of this year. We hit a bottom in the market and I was out, I was in cash, but the market just rallied right back up for about 2 solid weeks. And during that 2-week period, it seemed like the market was never going to have a sell-off again, that maybe we were actually going to all-time highs. But I missed out on that move. And the one thing I did, to my credit, is that I didn't chase after. I didn't say, okay, better late than never. A lot of people will say that. But instead, I just waited for the market to dictate the next opportunity for me. And while it was running higher, it never provided that opportunity. But then when it finally hit a wall back on March 29th of this past year, it provided a shorting opportunity. And I was able to pounce on that opportunity. But if I had FOMO'd into that position just days before it topped out, that would have meant some significant and unnecessary losses. So be willing to miss out on moves. I'm quite confident that in the second half of 2022, I will not catch every move in this market. There will be times where I have losing trades, and there will be times where I said to myself, man, I wish I had that movement to be able to take advantage of, and I missed out on it. But sometimes you miss out on moves because the market doesn't provide you the right opportunity from a reward to risk standpoint to be able to get long on them, and you got to be okay with that. Where people will get themselves in a lot of trouble is that after the fact, when it becomes very obvious that they missed out on the move, they will jump in it on the long side, and they will end up losing money instead of just being more benefited by sitting out the move and saying, okay, I didn't make the move, I'll wait for the next opportunity. My fourth lesson is going to be this: use the market's volatility to lessen your exposure in your portfolio. This year, compared to most bullish markets, I may have 50 to 80% of my capital being utilized at any given time. This year, it's been like 10 to 20% at any given time. What am I doing differently? I'm using the market's volatility. We have a lot more volatility in the market. It's not uncommon for us to see 2 to 3% swings in either direction on a given day. I'm using that volatility to be able to lessen my exposure in my portfolio, because if I go full board 100% max of my portfolio at any given time, and the market has this like 4 or 5% down day or up day, and it goes against my positions, what do you think that's going to do to me? It's going to destroy my portfolio. So when I'm trading, I'm using the market's volatility to say, hey, I can still get the same kind of returns with fewer positions because the swings in the market are so much greater. And if I'm wrong, at least I'm not being wrong with a 100% maxed out portfolio. So to sum up point number 4, I am using the volatility of the market to provide me with the returns with a lesser amount of capital in play. A couple of positions instead of 7 or 8 positions. I'm able to reduce my risk in the overall portfolio by trading less, but still being able to benefit from the market volatility that's allowing me to still profit. Number 5, I focused on ETFs for the most part of this year instead of individual stocks. Now, that's kind of more boring. I've been trading more like the SSO, the SDS. I've even been trading some of the one-to-ones like RWM and SPY and QQQ. I've also been trading QID and QLD. I haven't focused at all on the 3x leverage, but I've been doing a lot of 2-to-1 and 1-to-1. And why am I still doing 1-to-1? Well, you can still profit off of it. Like I said in the last point, where you're using the market's volatility, you can still pull off like 5 or 6% trading something like RWM or IWM or QQQ or SPY or PSQ or SH. But the other benefit to trading just ETFs over individual stocks right now, at least until we can get out of this bear market, is that you don't want to get caught being long on a stock, and then all of a sudden the company comes out with earnings guidance that says, hey, things are really bad going into our earnings report. We're not going to have as good of a forecast as we were expecting. And then all of a sudden you see your stock get hammered, or you get these massive downgrades. So it's much more beneficial for me right now to be able to reduce risk, because really 2022, the biggest takeaway from 2022 is trying to reduce risk as many ways as possible. One of them is trading ETFs. Now in a bull market, I love to trade equities, individual companies, and stocks. But right now I'm focused more on the ETFs because of the amount of headline risk that is out there on a given day. So if I can avoid trading one stock that might have some unknown headline risk and getting hit with the earnings warnings and seeing my stock plummet 20% overnight, and instead I can spread that risk out among 500 stocks using something like SPY or QQQ, which over 100 stocks, it's far better for me. Again, a lot of people want to focus on the aspect is they need to make money in the stock market, and so they need to trade with greater volatility and they need to trade with greater risk because they want the greater rewards. But in the end, and I've said this pretty much my entire trading career, is that the profits are not found in your winning trades. It's found in how you managed the losing trades. How much of an impact did those losing trades have against your winning trades? Because everybody can have winning trades. It doesn't make you some kind of stock guru because you made 5 winning trades in a row. What makes you a good trader is the fact that you didn't let that one losing trade wipe away all of your profits. And if you can just do that, if you can keep your losers to a minimum, if you can reduce the risk on each individual trade, you will be amazed at how much more those winning trades stand out for you. If you enjoyed this video, I would encourage you to like and subscribe. These were the 5 lessons for me that have helped me out the most this year, and I hope that they can help you out as well. Make sure to hit the join button down below and get all of my stock market research each and every day. That's going to include watch list setups, updates on all the main stocks. That's going to include updates on the indices. It's a really cool package and it supports this channel. So check that out and tell me in the comments below, what is some of the biggest lessons that you've had to learn here in 2022 and how are you going to apply those to 2022's second half of the year? Tell me down below. Thank you guys and God bless.